Morning, guys. Welcome to Coffee Chat. mm mm Wow, what a great morning it is, too. It is just absolutely gorgeous out here. Not hot, not cold. Has a nice breeze blowing through. Just a perfect Goldilocks day. Well, guys, I hope you all had a great weekend. Weekends always go by way too fast as far as I'm concerned. It doesn't matter whether you're working or retired, they are always going by fast. And what a weekend we had. Wow. All kinds of news is coming out, guys, right now, and I've been reading a bunch of articles on this whole Credit Suisse and Deutsche Bank deal. Now, a lot of rumors are flying around that they're facing some serious solvency issues and potentially could be facing a liquidity event or an insolvency event, similar to what Lehman Brothers suffered. Now, if that happens, guys, it is going to be devastating for the markets, not just in Europe, but literally around the globe. And you're going to see some pretty heavy knee-jerk reactions in the markets. And in fact, this morning I was watching the European market and I saw that they're already selling off. And a lot of it is due to this sentiment and these rumors going around about Credit Suisse. So that is a massive, massive deal. And another thing that's going on, obviously, is the whole debt market scenario. So last week, we saw the debt market literally just spike. The 10-year yield went so high. And then the Bank of England comes in and they had no choice, guys. They had absolutely no choice. They had to come in and do something immediately because they would either have saw their entire economy just start to unravel, and not in weeks, perhaps even days. And so what did they do? They turned on that quantitative easing. They bought back the market. Literally, the 10-year yield dropped, 3 basis points, which has never happened in history. I mean, that is a big deal. You need to understand, all of us need to understand, the beating heart of all these markets is the debt market. We are a debt-driven economy. And the liquidity crunch and crisis that we're facing is going to have some significant impacts. So what do you got going on this week? Well, today, the Federal Reserve is holding a special emergency meeting, and I'm telling you, it's literally about this very issue in the debt market. Now, my thinking is, after this meeting, they're going to come out and they're going to say, okay, we're going to level off. We're going to hold rates as they are. We're not going to do another rate increase on the overnight rate, and we're going to hold rates as they are. And then maybe by and by, what they might do is they might start doing some quantitative easing of their own. I mean, where they publicly come out and tell you they're doing it, because they have been doing it all along. And if they come out and do that, well, of course, the markets are going to love it. Now, they may also come out and just say, forget it, we're going to just pull the pin, which would be absolutely catastrophic. They come out and they say, look, we're going to raise the interest rate not by 75 basis points, but 100 basis points, or maybe even 125 basis points. It is going to be really, really bad for the markets. Now, how will that affect us, guys, in this digital asset space? Well, you have to admit that we are pretty correlated to the S&P, and especially if you were to look. Now, these digital markets, we have had bear markets, we've had dips for sure, but we have not faced any type of a real sell-off or crash. Okay, so what do I mean? You take a look at the Dow Jones Industrial Average chart from 2008 until 2021, roughly in there, and you see this steadily growing figure. Well, correlate that with the Bitcoin price chart and see if you don't see that Bitcoin has kind of like followed suit all the way up. Now, if there's a massive crash, and we are talking like something seriously devastating, I think initially you are going to see these digital assets take a tumble along with it. Now, will they fall as far? Maybe not. But I do believe that they will fall under those conditions initially. Now, hold on a sec. Having said that, I want to say this. I think there will be a decoupling from traditional markets in this digital asset space. Now, why do I believe that? I think that once utility comes into place, and I think you're going to start seeing it very, very soon, that these assets will start getting a lion's share of this market. And how do I mean that? Well, guys, most of these nations around the world that are facing these major liquidity crises are more than likely are going to start transitioning into their central bank digital currencies very, very soon. I'm giving it until probably June of 2023. You're going to see a major amount of them come on board. And certainly by 2025, which is not that far off, I believe the whole world will be doing it. Now, it's not going to only be our monetary systems. You are literally going to see distributed ledger technology, whether it's blockchain, DAGs, or whatever other consensus mechanism they use. These distributed ledger technologies are literally going to take over every facet of this entire world when it comes to data, information, whether it be healthcare or the authenticating ownership or whatever it is going to be, and especially in the monetary system, it is going to transition over into this new digital system, and we are going to step into the true digital age. And at that moment, guys, utility is going to matter big time. You are going to see these projects that have significant and serious utility literally take off. Now, I want you to think about something. Right now, let's take an asset like XRP. You're getting XRP at 40, 45 cents. You're going to see, in my view, you will see a significant price move in this next bull market, because I think utility is going to be a big driver of the next bull market, along with sentiment, of course. But utility is going to matter. And there's going to be a lot of folks when XRP hits $5, $7, $10, they're going to sell. The true value of these protocols and utilities is going to come, look, in 3 to 5 years down the road, when some of these assets are going to be trading at dollar figures that really most folks can't comprehend right now. And it is going to be truly life-changing, generationally changing. And so that's something to keep in mind, because look, it is going to be very, very tempting to sell. They work it in both ways, guys. You know, you've got that FUD, fear, uncertainty, and doubt, and people that panic sell when things start collapsing. And then there are those when it's kind of going up, they're afraid of, maybe, this, and they're just bang, they get out and that type of thing. And I'm not saying it's bad to take profits. It's good to take profits, but I would be I'm the type that is like, hey, look, I've got my exit strategy. I'm going to ladder out, but I'm always going to keep at least some in reserve. At least that's me. That's my thinking on it anyway. So guys, that's what seems to be going on in the world right now. But I want to hear what you think about it. Drop your comments down below there, because your opinions and your thoughts matter. Look, I appreciate all the comments that we're getting and the discussion that's going on. We have building up a great community, and you're a big part of it, and I really, really do appreciate that. So go ahead, drop those comments down in there and give us your opinions, your views, your thoughts on it, because I really do want to hear it. And listen, guys, I have a fantastic video planned for this afternoon that you are not going to want to miss. It is a big deal when it comes to this entire digital asset space. So until then, guys, I sure hope you have a great day, and take care, and we'll be seeing you later this afternoon.